Hey guys, it's Kieran. I'm just going to give you a quick market update, and of course we've got that CPI today, and it's the big news everyone's anticipating for. Last month particularly, the actual value was 6%, and the forecast for today's CPI reading at 8:30 Eastern Standard Time is 5.2%. It all depends on if we match it or if we exceed it, and most importantly, it's not so much about the numbers itself, time and time, and we've seen again. It's more about how the actual market participants actually respond to the news. And so, of course, we're going to expect some volatility. Going back to this Bitcoin range, we were initially in this long consolidation period for a really, really long time, for 3 weeks. And last couple of days, we broke out, which is great. And now in the lower time frames, just before the CPI announcement, we're pretty much stuck in this 15-minute mini range. There's certain levels to of course, be careful of. The previous day low, of course, was 29.6 roughly. It was also the daily open of the previous day, so on Tuesday. The recent local high of this 50-minute range is around 30.6k. And this was actually a false break of this range. And if you'd shorted this, I can understand your rationale. It makes sense, but personally, I'd rather wait for the third one. And I also thought, just given the potential volatility in CPI, I want to greatly see what happens there to gauge a better reaction, potentially. But of course, it's expected to be a day of volatility. So far, we're now in this no man's land region. A potential situation, of course, could be a push down here to really remove the cluster of stop losses around this previous daily low and, of course, this range low as well. And maybe after that, potentially a push up like this and grab the liquidity here as well. And so this is something to really be careful of. And so the first scenario is potentially a push back down here. And if you see a confluence and a potential false break setup, then of course you can open a long position, maybe ride it up to maybe 32k, of course take profits on the way, right? And if potentially we then grab the liquidity from this point, then you might think, okay, if you've got enough confluence, you might think of a potential false break and a short setup of this range here. And so you can pretty much play this in several ways. But as of right now, we still are in this no man's land. Of course, I suspect CPI will greatly dictate the price action, right? But drawing a fixed range of this particular section, let's see certain key levels. So we pushed above here, found support here. Range started around Tuesday. And so, yeah, I mean, it's a very tight range, right? The value area low. So the lower end of this really high volume area is around 30k, 29.9k. The upper end is 30.3k roughly. The trend is generally bull biased until proven up otherwise. And so I think specifically for swing trades, your priority, I think, should be more waiting for pullbacks to longs if you're so inclined, rather than trying to short every rise up, unless you see a clear evidence of a false break, right? You don't want to be that guy that's just constantly shorting the top 9 times and then the last time you get stopped out. It's better to just kind of ride the trend until the trend stops going on, right? Because now we're in a trending market now more. Before, for a long time, we were in a consolidation period here, right, on the 4-hour chart before we broke out as range. But of course, it's a mini range in the lower time frames. And so, of course, if you plan to get in and out scalp counter trend trades, like counter short trades, which is counter to the actual trend, then I recommend definitely getting in and out the same day. I think the major kind of warning flags that this is just an initial false move and moving back down to 28k, of course. I think the key levels are around 29k and potentially 28.3k, 28.2k roughly as well. And I think once we start getting high time frame closures below 29k, that's the first warning sign. But a definite warning sign is a move back down to 28.2k. So we started this range around here. We broke up around there. So if I pull it to around here roughly. Yeah, so the value area high, so the high volume section of this area here is around 28.5k, 28.6k. And so if we start getting acceptance back into there, then that's the first warning sign that this was just like a false move before we continue much lower. But so far, it does seem the bulls are very much in control. Something to also consider is that when you're in a very strong uptrend, generally speaking, you would expect the 382 to really hold, generally speaking. Not always, right? But it's just a bit of confluence. And so so far, we've only really retraced from the starter's move impulse. We've only really retraced to the 236. Could we get a pushback to 382? Potentially, and that would potentially coincide with the previous day's low, right? And potentially grab the stop losses before pushing up higher. And conversely, you can never know the exact order. We might move here first, take out the liquidity here, and then push back down here, right? Other key levels, of course, to be really careful of. The 2021 open, of course, we've tapped it a few times now, but this is 28.9k. It has been an interesting level. Of course, the quarterly open, 28.4k. But so far, it does seem like we probably do get a consolidation period before an eventual move to 32k. It's what the trend suggests. I keep talking about this range specifically back in May 2022. Like, nothing happens exactly, but in this high volume section here, the value area high was around 28.9k, and this greatly coincides with this 2021 open. The point of control of this region was roughly 30,050 roughly. Of course, it depends on the chart you draw it on, and the value area high of this was roughly 30.5 to 30.8k, depending on the chart you draw. And so, of course, initially, like 2 weeks ago, I caught that initial short, of course, a false break around this confluence factor here. But now it seems like we're starting to get acceptance above this value area low. So we could, and initially we had that initial rejection of that point of control in this recent price action. And then, of course, initial rejection around this value area high. Of course, this value area high is a rough zone, right? But we initially got that false break in the lower time frame just yesterday, around that 30.5k, 30.6k. Now, the question is, do we have a brief pullback and before pushing back higher? I'm actually interested in no shorts yet. I can understand if you do shorts, intraday scalps, but for me, the trend is bull bias. But a potential short you might consider is, of course, it's level by level. You don't want to just limit in shorts because Bitcoin can stay extended for a lot longer than you can solve it. A potential short could be if we do actually get a break of this range higher on 32k, and you might think of a false break, a trade like a shorting it. Again, it depends on the reaction. We could blast straight through. And looking at the longer short ratio, retail has been heavily net short, particularly leading up to this huge run up here. The last week in particular, we were 0.55 retail net long. So that means retail traders, generally weaker traders, were net long. But then the last couple of days, so potentially from the 10th of April, we went as low as 0.36 net long for retail. And so that is the highest amount of retail net shorts I've actually seen since last November. And even last November, the actual value was 0.4. And on top of that, the open interest was increasing quite rapidly. And so this overall suggested to me that there was an overall entering of retail into this market. And of course, naturally, we had that short squeeze. It's nice to see that we have had some decrease in open interest. And I think that greatly coincided, how, as I said before, that I expected some kind of potential brief pullback, maybe to 29.9k, 29.7k potentially, just to get rid of the people who move the stop losses to break even, to get rid of really late longs, and then potentially push up higher. And there's beginning to be a divergence between the top traders as well. So this is the top traders, and they're actually are 0.54 roughly net long. Of course, it's nothing crazy, but there's just a huge difference between the retail and the actual top traders. So we'll just see how this progresses along, really. Looking at a more macro picture, I've drawn a Fibonacci actually from the recent cycle peak around 69k to the recent like a low around 15.5k. Initially, we had that reaction across this 236 region here around 28.1k. Initially, we're consolidating, we had that mini range, and we eventually broke above. And so this actually is a major sign of strength. We've actually somewhat reclaimed this 236. And the question now is, do we actually push up then to 32k? That's something I'm watching. And it does seem we've actually had a reaction across this huge key resistance around this 30.6k. Initial false break. And we've kind of pulled back a bit in anticipation of the CBI. But you have to realize that Rome isn't built in a day, right? So even if you do expect 32k, where a lot of people will get wrecked is assuming that it happens within 1 day. And usually it can take up to 9 days based on some other statistics. And so this is something I also mentioned a few times now in the streams and other videos. This is the BBWP indicator, and this is measuring volatility. Whenever it gets to the extreme red section, that means the market is highly expanded. And then when it gets to the very blue section down below, that means the market's highly contracted, as we saw last Christmas. And of course, markets move from periods of expansion to contraction. And the greater the period of contraction, generally speaking, the greater the period the market actually expands once the direction of expansion has been confirmed. And of course, you would combine it with other things to actually see the actual direction of expansion. But just 2 days ago, the actual direction of expansion was confirmed to the upside based on other things. And now we've actually moving away from this contracted state to a more expanded state. And statistically, based on other samples of Bitcoin history, usually speaking, there's usually a 19 to 20% move on average from when the signal is confirmed. So the signal was confirmed around 28k roughly, and so that would actually put us to 32k. But note how I said on average within 9 days. And so you have to accept that we could be in a sideways range, mini sideways range, potentially maybe till Thursday, Friday, very latest. And even if still, 9 days would actually put us next Tuesday or Monday. And so I wouldn't get too worried. To be honest, the trend is bull bias until proven otherwise. And of course, nothing moves in a straight line, so some patience is required. So looking at the 5-day Gaussian channel, this also aligns with that 32k target that we eventually likely do achieve. But in this particular target, I said how initially with that rejection of the top 5-day band, 26.5k, we pull back, we had a push above, and of course it's a 5-day chart. But usually once you break above, based on Bitcoin history, and you retest the top band, there generally is a 30% move on average, and 30% of 26.5k does put us to 32k. Of course, a lot of people will be screaming the same targets, and people again will get wrecked as usual by shorting too early or just assuming it happens with one day. And so don't get ahead of yourself really, and one step at a time. But looking at the actual weekly target, the weekly target roughly is 31.8k, 32k, and so we see that number cropping up so many times now. So looking at the S&P 500 chart, and of course this can be a leading indicator for rest of market like crypto and in general. Of course, sometimes the correlation decouples, but it's always important to be careful of. We are approaching this key level resistance around this 4.1k region, and the next level, of course, is around 4.2. But looking at the fixed range, as you can see here, this is that really high volume area, and the upper end of this is around the value area high, so around 4.1k. Initially, we had that rejection of it, but now it seems that potentially we could be having some kind of support resistance flip. Maybe we could get that target of 4.2k and potentially as high as 4.3, but that is a bit of a while away. Nothing obviously happens in a straight line. Looking just briefly at the Dixie, of course we've been in this long-term macro channel, and we had this initial reaction actually across this key Fibonacci around the 786 and 886. I've drawn it from here to here, and we had that push above. We had kind of a false break and come back down. Then we revisited the 102, 101 monthly level, and we had an initial reaction across that. In terms of the crypto total market cap, that 1.18 trillion region was a huge amount of resistance initially from August 2022. And initially in local price action, we really banged across that ceiling so many times. And then we broke down. And now it seems we've broken above it. Question now is, do we just have this support resistance flip and you bang on this as support now before potentially clearing out other potential extensions targets? And so far we actually have hit so many extension levels. Potentially do we get to this 1618 extension around 1.24 trillion? That's something I'm really careful of. And of course this potential target here around 1.32 trillion. But it's always important, I think, to be careful of that. If you're in a huge amount of profit, just take profit consistently, like in a grid-based approach, rather than just trying to hope for one magical target which may or may not happen. Looking at the actual ETH to Bitcoin dominance chart, of course we were bleeding for a really, really long time, like here and then initially here as well. But now the question is, do we get some kind of support here? Ethereum has actually broken out a bit. We had a huge amount of resistance across like a key weekly level around here as well, but now we've broken above it. And the question is, do we reclaim this much anticipated 2000 weekly level? Of course, there's a lot of news, like for example, the Shanghai fork. Back here, there's of course all this Ethereum merge news. What happened was buy the rumor, sell the news. And it's about how the market participants actually respond to the news. And at this point, this news is already common knowledge. So I would think the price action is very often already priced by the chart. And so for me, TA is king in this particular circumstance. Of course, there doesn't seem to be much in the way really till 1.9 to 2K. Potentially we could have that run up into CPI. But you have to always be careful, this is a key weekly level, and so potentially expect some kind of reaction. But this is much anticipated, and this was actually the Ethereum peak in August 2022, and we still have not reclaimed it yet. Yeah, but guys, that's all I have to talk about in this brief market update. Do check out my YouTube channel, which I discuss my passion for crypto and trading, and I provide market updates. Thanks a lot for watching, guys, and I'll catch you in a bit.